Hey everyone, welcome to tonight's news trading session number one. Obviously, it's going to be the NFP numbers tonight. Huge, huge expectations coming up from the market. Hope everything is coming through okay. Let me know if there's any issues with audio. Seems to be okay from my side. Okay, let's get started. My name is Vidya Jado. Let's get this started with the non-farm payroll numbers. Obviously, we are going to be expecting Uh, hopefully a volatile market, but we'll see what happens here tonight. Okay, everything seems to be coming through okay. Welcome to tonight's session. Before we begin, obviously, we are going to go through with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involved risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right, as per usual, we're going to have our bonuses for participants. There's going to be a promo code TW deposit bonus, and we will share the code soon and at the end of the session as well. And you should already have access to the private Telegram channel if you have attended the previous sessions before. And either that or you should be receiving it on your email through the website. Okay, all right, this is the code for tonight. It's Nonfarm 2024. This is the W deposit bonus, so make sure you use the code when depositing into your Octa trading account. It is valid until the 31st of December 2024. Okay, well, good. It's Nonfarm 2024. Make sure you use the code or you just jot it down if you want to use it later on. Okay, it is valid until the 31st of December 2024. Okay, just a little bit about myself. My name is Virenjaro, and I've been a full-time trader with over 20 years of experience. And I've also been a professional trading coach and technical analyst since 2007. My expertise is actually in the Ichimoku Cohero technique, which is a Japanese charting techniques. I'm also a director at Zenifix, an independent market consulting company. I've also been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analyst Association and the Australian Professional Technical Analyst. Okay. Okay. So as per usual, we're going to go through some of the theories first, and obviously we do want to talk about the NFE trading strategies, and we will cover this a lot more next week in our second session, which is the news trading theory session. So make sure you attend that session before the CPI numbers, which is also going to be released on Thursday. So part two and part three, it's going to be on Tuesday for the theory session, and then on the 11th, I believe it's on the 11th. Let me just check quickly. 10th. Okay, so on the 8th, we'll cover the theory, and on the 10th, we'll cover the CPI numbers. Okay, but for tonight, I want to focus a little bit more on the labor data. And this is obviously going to be the main focus for FOMC at this point in time. And also, market participants are going to be looking at this, any changes, any weakness in the US market in terms of the labor market. That's going to be the main focus for a lot of traders. We'll talk more about that later on. Okay. Okay, so we're gonna go through with who is or what is the Bureau of Labor Statistics. So the Bureau of Labor Statistics, or the BLS, it's basically a U.S. federal agency that collects and disseminates various data about the U.S. economy and as well as the labor market. Its reports includes the CPI numbers, which is going to be released on the 10th next week, as well as the PPI number, both of which are considered important measures of inflation. So within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture, which is the non-farming payroll, as well as the unemployment rate. I think tonight's focus is going to be a lot more on the unemployment rate. Um, so yeah, we'll see what happens there. We had the private payroll numbers. That was the ADP number that was actually released on Wednesday. Okay, that was quite a huge surprise to the upside. So we'll see what is the NFP number going to be. So at the beginning of every year, the agency basically publishes a calendar with the release dates for the entire year. Unemployment data is published every first Friday of the month, which is obviously today. But if it falls on a holiday, publication usually postponed to the following week and occasionally to the Thursday of that week. So far, I think we only have basically March being postponed to the second week because February is the shorter month. Okay. Inflation data typically published on the following Wednesday. This for next week is actually going to be on Thursday. So we are going to be looking at that inflation number as well next week. Okay. So, what is the NFP numbers? The NFP is basically a report that is released monthly by the US Bureau of Labor Statistics that measures the number of jobs added or lost in the US economy, excluding farm related jobs, private household employment, as well as non-profit organizations. So, market analysts and investors usually look for NFP figures above 200,000. That's seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. Now, for this month's number, we're not really looking at 200,000. If we get a surprise above 200,000, obviously that's going to be really good for the US dollar. But I think for right now, if we get a higher number than the previous month, I think that's already good enough for the market as it is. But yeah, I mean, if tonight we get a surprise above 200,000, obviously that's going to be a huge positive. But again, looking at the context of the whole thing, at this point in time, we get 200,000, that's good. If we didn't get it, that could also be good depending on the numbers released compared to the consensus, which is not really high. I believe it was 145,000 last I checked, but we'll see what happens here compared to the previous month, which is about the same number in terms of gains anyway. Okay. So the NFP data is basically a crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below market expectations may be viewed negatively for the US dollar, while one that exceeds expectation may be viewed positively. Okay. So NFP figures are closely watched by traders and investors, especially in the forex market. I think this is actually considered to be the number that everyone kind of trades every month. I think a lot more so than the inflation number here. And again, with the focus now coming back into the labor sector here, obviously this is going to be the main focus for a lot of traders, much more so than the inflation number. Things have changed. I think in the past 2 years we look at the inflation number, but right now since the FOMC with their rate cut and through Jackson Hole, with the focus on the labor market, we basically get a little bit of a shift that this is now more important than the inflation number. Okay, so anything that has to do with the US dollar, Euro USD, dollar yen, dollar Canadian, Aussie USD, pound USD, those are going to exhibit high volatility in response to the report's release. Now, according to the BLS, non-farm employee classifications account for approximately 80% of the US business sectors, contributing to the GDP numbers. Obviously, if we get a softer labor market, then we do expect the GDP to kind of be a little bit on the softer side as well. So again, the major currencies, anything to do with the dollar in there, that's going to be really volatile. Gold is also going to be really volatile. Crosses, probably not so much, right? Anything with the euro, pound, for example, Aussie, New Zealand, pound Swiss, euro yen, sterling yen, they're not directly impacted, but depending on the impact on, the majors like the euro USD, the pound USD, on the Aussie USD, they might have secondary impact on those crosses. But if you want to be looking at markets that's not really directly impacted by the NFP numbers, and those are going to be your currency crosses. Okay. So also be very careful with this one here. Typically during the release, there are going to be strong changes in quotations, i.e. the spread could widen. We might get liquidity drying up. So there's actually a lot of risk involved as well. And some severe cases we might actually get slippage as well. But yeah, a lot of the stuff that happens here, for example, if market is pricing in for the unemployment rate to be stable, at this point in time we see a stronger US dollar, for example, and today if we get a higher unemployment rate, we might actually see that reversal happen for whatever has happened throughout the whole week. Okay, all right. So the other set of the data that we're going to be looking at is obviously the unemployment rate. This is actually more important. I think there's a lot more focus on the unemployment rate. This is calculated in percentage, and it is published at the same time as the NFP numbers. And the unemployment rate basically represents the proportion of the labor force that is currently not employed but is capable of being employed. And the survey is done here. It's actually pretty small in terms of the sampling size. It's only 60,000 households. And that's for the whole of the United States. Okay. Now, there are some criteria, obviously, and according to the US Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job, they must have actively looked for a job in the past 4 weeks, and they must be available to start a job if offered one. Now, basically, to meet the criteria here, you kind of need to claim your unemployment benefits. So, I think in the purpose of looking at the surveys here, I think majority of them are actually taken off people that has claimed for their unemployment benefits, and then this is where it links up to the weekly unemployment claims that we see every single week's release there. Okay, because if a person doesn't meet the criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. Again, the sampling rate is actually just 60,000 households. Um, it's not really a fair representation of the labor force there, but typically this is what we look at in terms of the benchmark there. But again, if we have significant gains in the NFE numbers, and if we have that significant gains in the NFE numbers, and with the unemployment rate, even if it does go up, um, it might not have that same impact into the market. So for the market to go in one direction, you basically need to have a lower gain in NFP number and a higher unemployment rate. That's typically going to be bad for the US dollar, and specifically for tonight, it is going to be a little bit tricky because how market has been pricing in for stuff, and also in terms of how the FOMC is pricing in for their rate cuts. I'll explain that a little bit more later on when we take a look at the numbers there and the possible scenarios. Um, but yeah, if we get a gain in NFE, we also get a gain in unemployment rate. It's actually a mixed number, and that's where we need to be a little bit more on the cautious side. That's where we see a lot of volatility in the market. Okay, okay. All right, the third set of data, at this point in time, is probably not that important to focus on, but this is obviously a set of data we need to take a look at as well. So the third set of data is the US average hourly earnings, and we basically look at the monthly gains here. This is the data that is released monthly by the Bureau of Labor Statistics alongside the unemployment rate. It measures the average hourly earnings of workers in the US economy. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. And economists, investors, and traders do monitor this very closely because it can offer valuable insights into the state of the U.S. economy and its potential impact on inflation. All right. So when trading based on the U.S. average hourly earnings data, traders often scrutinize changes in a wage growth rate compared to the previous month. That's when we look at the monthly change. I'll show you the yearly change as well, but again, we typically monitor the monthly change there. And the reason why we monitor the monthly change is because a higher than expected wage growth, it may indicate potential inflationary pressures, which can result in higher interest rates and currency appreciation. Conversely, a lower than expected wage growth rate may indicate weaker inflationary pressures, which may lead to a lower interest rates and currency depreciation. So, let me pause here for a little bit because this is directly linked into inflation, right? So, if you earn more, then there's a higher chance that you will actually spend more. So if people are actually earning more, it could actually push inflation up because people are going to be spending more. If the earnings drop, then we may look at people not trying to spend that money. That could actually push inflation down. This is where the link is, I think, in terms of how we look at inflation number as well as the unemployment rate and the NFP numbers. This is actually the numbers, right? Is people getting paid more? If they're getting paid more, then they're likely to spend more. If they spend more, then inflation is going to go up. That's the logic behind things. Okay, so if like right now, if market is expecting more rate cuts from the FOMC, that means they are going to be looking at inflation to stabilize. Then ideally, we do want to see the average hourly earnings drop down. Right now, it is at about 0.3%, by figure 0.2, 0.1%. That will create that sentiment in the market that, hey, everyone is earning less, they're likely to spend less, therefore inflation is likely going to go down in the future. Then the FOMC is likely going to cut rates even more, which could be an aggressive cut or not. But yeah, the next cut is going to be on the 7th of November. And in terms of what they're going to be cutting, I think the market wants to see bad numbers. Like they want to see higher unemployment rate. They want to see lower gains in the NFP numbers. They want to see a drop in average hourly earnings. Because if we do have that negative numbers tonight, then everyone is starting to price in for a 50 basis points cut for the 7th of November event. While the FOMC themselves this week has basically laid out the plans and, clear out everything in the market that says, hey, are you going to be cutting 50 basis points again, or is it going to be 25? The FOMC is right now strictly at 25 for this year, which is an extra 50 basis points cut, while the market is expecting bad numbers to come out tonight, so that they can price in for an extra cut next month. Okay. All right. So we're going to talk about the NFP trading strategies. We can do a couple of things. Obviously, we will focus on the straddle strategy for tonight. But pre-NFP trading, a lot of people does this. Basically, you trade in anticipation of the numbers tonight. If you are going to be trading pre-NFP numbers, then you would actually exit from your position right about now. You want to clear out your positions before the actual NFP release to avoid extreme volatility that can follow with it. Or we can do the straddle strategy, which involves placing two pending orders, a buy stop and a sell stop, if we have the right market condition, all right, above and below the current market price just before the NFP release. Only if we have that accumulation phase, only if we see that corridor of volatility. In currencies that we don't see this corridor of volatility, we would tend to steer clear from using the straddle strategy, i.e., we don't want to see the market moving before the NFP numbers. It can move, but just don't create that extreme volatility before the news is released. If the market does that, then it's ideal not to take the straddle strategy because that it'll create a lot of risk. We will explain how to use this next week on Tuesday during the theory session. So make sure you attend that if you have never attended that before. Okay. But if we have the right conditions and we can straddle the market, then we can actually benefit in terms of whether or not there's actually going to be that swing to the upside or to the downside. Typically, the flow is one directional, but occasionally we do get a whipsaw that happens where the buy stop and the sell stop get taken out. But in theory, once one of the orders is taken out, then you actually need to close the other order. Okay, otherwise you'll be trapped in the potential whipsaws that the market could give you. Okay, the third one is going to be fading the initial move. So this strategy basically involves waiting for the NFP release, observing the initial market reaction, and once the volatility subsides, we want to look at opportunity to trade against the initial move. And this approach is based on the idea that the market often overreacts to the NFP data, and a retracement or reversal is likely to follow. What I'm trying to say is typically with the NFP release, the market will go in one direction. It will revert back into the range and, do a couple of reversals. So we might actually see one spike to the upside and it actually reverse back down to the entry point before it actually starts, collecting more buyers or sellers into that, the initial trend move. Okay. So we'll try and look at the potential fade here. We haven't been able to trade the fade. I think in the past 6-7 months, I don't think we have actually traded the fade. It is actually dependent on the situation as well, whether or not we can look at that. And if it's at the key level, then yeah, we will pay closer attention to those at the key levels. Okay. All right. Post NFP trading, obviously you can you can wait until the data is released, and then you can wait for market to digest the NFP data. Look for trading opportunities in the hours or days following the release. This is typically for swing traders and position traders, or people that want to avoid volatility. Don't really want to trade in the volatility and then just jump back into the market. Okay. All right. Regardless of strategy you choose, you have to keep the following tips in mind. You have to manage your risk. Always use appropriate stop loss orders. Never risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news, forecast, market sentiments leading up to the NFP release to make better informed trading decisions. Hopefully, you're doing that. Be flexible and be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. Okay. Okay. All right, so we're going to go through the numbers that we are looking at today. If we take a look at the previous number here, it was at 142,000. The consensus has been dropping down. We started the week at about 147,000. Right now, the consensus is pretty low at 140,000. Forecast is even lower at 130,000. So I think the market is preparing for, a small gain compared to last month in terms of the NFP numbers. The unemployment rate is expected to come in at 4.2%. Forecast is at 4.3%. Wouldn't be a surprise if we see a little bit of an uptick in terms of the unemployment rate. So we'll see what happens here. But a couple of scenarios to talk about here. If we have the NFP numbers, above 150,000, right? That's below the 200,000 range, but it will be higher than the previous number, and it's also going to be higher than the consensus at 140,000. Okay, so if we get 150,000, that's half of the puzzle there. It could actually strengthen the US dollar. That could be one way to look at it, or it might come in lower than the consensus. If it does come in lower than consensus, let's say it comes in at 130,000, that's likely going to push the US dollar down. Okay. And the unemployment rate, I think this one here is a little bit tricky, right? We might get 4.3%. I doubt we get 4.1%, but if we do get 4.1%, then the Fed is unlikely to cut a huge rate in November. I think they're going to go with 25 basis points. I think that would confirm that they'll go to 25 basis points. However, if the unemployment rate comes in at 4.3% or even worse at 4.4%, it will actually hit the ceiling that the FOMC projection is for 2025. Which is only at 4.4%. And if it does hit 4.4%, then I think market is going to strongly price in for that 50 basis points cut on the 7th of November, 2024. Okay, sorry. So, if we take a look at that scenario, that's going to be, if we get a weaker non-farm payroll, if we get a higher unemployment rate, that's likely going to push the US dollar down. It would actually reverse what the market has been pricing in for this week. So just be mindful of that because we have seen the US dollar correct itself this week. I think we mentioned that on the outlook on Monday that we were anticipating the US dollar to kind of strengthen a little bit. And we have seen the Euro USD, the Pound USD, and the Aussie USD kind of fall down, and then the dollar yen is recover as well. If we get that negative numbers tonight, that would cause the US dollar to drop down. However, considering that market might decide and say, it's very unlikely that the FOMC would cut by 50 basis points in November and December. We might actually see that temporary drop on the US dollar, but it could actually reverse. So you got to be really careful here if the number is actually bad. I don't know if it's actually going to be sustainable. It depends on whether or not it actually breaks key level. If it doesn't break key level, then it might not be sustainable. We might actually be looking for a fade there. Okay, so just keep that in mind. Obviously, on the flip side, if we have everything positive, that would actually strengthen the US dollar because then everyone would say, hey, you know what, FOMC is probably ahead of the curve. They don't really need to cut 50 basis points come next month. Okay. All right, we got about 5 minutes left before news is released. I want to put on a couple of trades here. Let's take a look at the Pound USD. The Pound USD has been recovering a little bit, so technically we are not able to place straddle on this one here, at least not on the Pound USD. It's just not within that range at this point in time. We can create a little bit of a buy stop if you want to, a little bit higher here, maybe about 1.3190. All right. Okay, about 1.3190. Okay, and for the Euro USD, this one here, you can straddle this one. You can straddle this one. Second. Test audio seems to be good. I think I lost audio here for a little bit. Let me know if audio is coming through okay. Okay, we should be back, I hope. Anyway, for Euro USD, we can straddle the Euro USD. We do have a little bit of a buy stop here, a little bit higher. Ideally, we want to place it at 1.105, but considering the range that we have here on the Euro, you might have it at about, yeah, I think 1.105, it's probably the more ideal level, but considering how the market has been trading for today, 1.1040, it's probably a much better place to put on that buy stop. And for the sell stop, you know, looking at the current condition here, we definitely want to have it below 1.10. And this is a little bit unfortunate because that's going to be a little bit too far onto the downside. But the range, for the Euro USD here, it is actually not that huge. If we try to measure the range between the buy stop and the sell stop, it is basically about 35 pips, right? So in terms of the sell stop, you probably want to have it at 1.105, right? Stop loss is going to be on the other side, right? So if you have a buy stop at 1.104 on the Euro USD and your sell stop is going to be at 1.10. Okay. We got about 3 minutes. Let's move on to other currencies. Dollar yen, this one here is a little bit tricky, considering how volatile the market is. And, take a look at the hourly time frame here. What the range that we have here, that's already about 150 pips. So, if we have that buy stop and a sell stop, your buy stop is going to be 147.30, right? Slightly off the highs yesterday's on Wednesday as well, and your sell stop is going to be below 145.50. I would actually stay clear of this one here because the range is just too big at this point in time. The Aussie USD, very quickly here, we are about 2 minutes to go here. You can have your buy stop here, just likely about 68.55. Yeah, about 68.55. That would be a good buy stop level. And in terms of the sell stop here, we want to have it a little bit lower, right? You do want to have it below 68.30 at this point in time, about 68.25. That's pretty much it in terms of what we have for today. The pound USD is not ideal in terms of placing where the sell stop is going to be. So I don't think you can actually straddle the pound, but it really depends on how you want to do this because right now we just don't have that straddle level unless you put your sell stop below 1.31. That's going to be really far. That's talking about 100 pips on the pound USD. It's very risky. But in case on the buy stop here, make sure your stop loss again. If you want to take the pound USD, your stop loss is going to be at 1.3090. So it is a huge move. For 80 pips on the pound USD is actually pretty huge at this point in time. So Euro USD, Aussie USD, those two are going to be okay. New Zealand USD, you're not able to straddle the New Zealand USD. This one here has been on a constant downtrend. Gold here also a little bit tricky because again the range and volatility is actually going to be really high. If you do want to have that buy stop here on this one, you do want to have it about 2,675. Um, but for tonight, I wouldn't take that trade. In terms of the range that we have here, it's just going to be really huge. Because if we have our sell stop at 2,655, that doesn't give the market enough room. And the logical sell stop in terms of the support range is actually a little bit lower below 2,640, right? So, just for the sake on the risk here, we wouldn't take this trade here. Okay. You should be released. All right, I think we do have a little bit of a slippage here. Euro USD down, Aussie USD down. Pound USD not placed. I'll close that order. Aussie USD close. The number here, 223,000. Wow, that's a 254. 254,000. That's obviously about 300,000. That's also higher than what the market is expecting as well. Average hourly earnings is also high. Previous months was revised up to 0.5 equals zero point 0.4. Average hourly earnings yearly up from 3.8 to 4%. That's a good surprise to the upside. We're looking at the unemployment rate here. Unemployment rate is at 4.1%. All the data points to a good labor data. NFP numbers, huge jump to the upside. That's obviously going to benefit the American dollar. So yeah, no changes in trend. You see what's going on here on the pound USD and the euro USD. You can move your stop loss to break even right now if you want to. I think we got pulled down a little bit more than what we wanted on the euro USD. Pound USD didn't trigger the buy position, which is good. We didn't get a whipsaw. Aussie USD is now down. 68 is achieved. For Aussie USD, you might want to move your stop loss to break even if you get a much better entry here. Once this one dips below 68 cents, you might want to start moving your stop loss to 68. If market hits 67.75, that could speed things up to the downside. Are we able to fade this? At this point in time, we are looking at Euro USD. If we have a bounce on 1.0950 on the Euro USD, then we could potentially fade this. Really depends on whether or not we could actually fade this. But yeah, right now, if you do want to target something out of the Euro USD, you can go for about 30. You should get more than that. I think this one here got slipped a lot more, but in terms of target level, 1.0960, I think it's about right, or you can target 1.0950 if you want to. And your stop loss really depends on when you want to place that stop loss, but ideally it should be at 1.10, slightly higher than 1.10 just in case it snap back and tests 1.10. The Aussie USD again for this one here, in terms of stop loss placement, you ideally should have that stop loss up there at 68.51. All right. But again, for this one here, once it speeds up below 67.75, we are going to be targeting 67.50 first. And once it go past 67.75, you do want to move your stop loss to about 68 just to lock in something out of it. Okay. Um, it's not really that hard. I don't think we have a lot of whipsaw. Can we keep our short on euro pound? Pound? Yeah. You can. I think you can. But in terms of the euro USD, let me just bring on my trading view so I can give some key levels that we were monitoring for this week. Dollar yen obviously shooting up like crazy. That's also boosted by the Bank of Japan and the current prime minister, that mentions just yesterday that it's not time for the Bank of Japan or for Japan to actually see higher interest rate. Euro USD, just be mindful of 1.0950. That's the area where the support 3 on the weekly pivot is located. That's also the base of the Ichimoku cloud. If we have a break below 1.0950, then yeah, you can probably hold it for a swing trade towards 1.09, but that's pretty much it. So I would be more than happy to just get out at 1.0960, 1.0950, and I'll be done and clear for the day here before it kind of snaps back everything. And for the Aussie USD, obviously we are in this support area here where that was actually the previous resistance, and that has been kept. This is currently being tested as support. That's also where the Kijun Sen is located. 68 cents is obviously also key in terms of whether or not it can actually push down to a 67, below 67.50. That could be the case, but we're looking at 68 cents to 67.75 as a stronger support area. And this is the reason why I say, if it does go down below 67.75, then it could actually speed up to the downside. But if it's not able to go down below 67.75, I would suggest just get out from your position for this week. Is Euro making double top? I believe Euro, looking at that, yeah, it is looking at a double top at 1.12. In terms of whether or not it is really a double top, we can actually consider it as a double top because it actually failed 3 times when it tested it for the second time. But consider this, in terms of the double top, we're basically just looking for one more extension. That's how far a double top could actually mean anything. So this is still likely going to find support at 1.0950. That's where the base of the Asian cloud is located. That's also where the 127.2% is also located. And that's also where the support 3 for the weekly pivot is located. So, we might actually see a lot of positions being cleared right around 1.0950. Okay, so just be mindful of that. All right. So, yeah, I don't think we're going to be getting a fade at this point in time. Well, it's only been 5 minutes, so we'll see. Also, what happens here, but definitely not going to be looking at a fade here. Also, for Dow Japanese yen, please do not chase the trade here. Obviously, for Dow Japanese yen, market participants are basically looking for more confirmation in terms of whether or not we could start buying the Dow Japanese yen. One of the key levels that was broken was that 145, 146 range that was broken on Wednesday. That was tested again today before the market kind of just rally up. Right now, this is past resistance too. We got resistance three coming in at 149.50, but we are already within the Ichimoku cloud here, so there's going to be a lot of resistance all the way up to 152 if the market attempts to break this. So be a little bit more on the careful side on the Dow Japanese yen, whether or not it's sustainable. Really depends whether or not it can actually surpass the high. Basically, here when the market retraced in August, right? When the market retraced in August, we got 149.35 as our resistance. That's very close to resistance 3 at 149.50. So we are going to be keeping an eye out on the Dow Japanese yen in the coming weeks, whether or not it's actually going to get resisted at 149.50. Okay. Okay. Let's take a look at some of the other stuff here. Potentially in gold. Let's see what is the reaction in gold. We're not looking at a lot of reaction in gold here right now. A little bit of profit taking that's already anticipated by what we were looking at the outlook here. I think we're looking at this as more of a profit taking. I do excuse me for the phone ringing in the background. But yeah, right now, intraday wise, this is still very choppy. We're basically just revolving around the weekly pivot here. Obviously, time is about to end for this week, and we're basically going in and out of the Ichimoku cloud at this point in time. Okay, so we're keeping a close eye on this one here. But in terms of longer term directionals on gold, we don't have a clear direction as of yet. I do want to point out that we are actually within a pennant in gold, so just be mindful that this is currently not trending. And if you guys are not seeing this, this is the flagpole that we have, and this is the resistance trend line. And we also have a support trend line that's currently forming a pennant. So because this is a pennant, it does mean it's kind of bullish neutral at this one time. It does carry a little bit of a bullish connotation to it, but because it's a pennant, it does carry some neutrality with it as well. So with price just revolving around the pivot here around 2,650 being well support at 2,600, we're not really looking at this one here collapsing anytime soon. We're just not looking at the price action. It could change following tonight's number, but at this point in time, it is not showing us anything. It's not really making a box. It's actually within a pennant, and with a pennant, it's technically a flag with a symmetrical triangle, right? So that's what we're looking at. All right, equity market. We can also look at the equity market. Nasdaq is at 20,000. I think overall for the equity market, the number for tonight should be good. Um, how does that play out, right? Because this is kind of really weird. With the good labor data, the market is still expecting the FOMC to stay ahead of the curve by cutting 25 basis points in November and then another 25 basis points in December. So, from that outlook itself, it doesn't change anything in terms of the equity market. Instead, the equity market might look at this and say, hey, the US economy is actually not really doing that bad. We're still going to be getting our rate cut, so let's take the futures up. I think this is good for the equity market. At least Nasdaq is shooting up at this point in time. It's not back at 20,000. Whether or not it's actually sustainable at 20,000, that's going to be the question here. And consider that this is actually pre-market. We are looking at a huge run pre-market here on Nasdaq. Today, pre-market is already gained 225 points for today. So we'll see what happens when the market open. The US 30, right? On the daily time frame, if we take a look at the US 30, it is kind of flat, finding support at 42,000. Again, remember this, 42,000 was kind of the target that we were looking at for when the FOMC was about to cut 50 basis points. Prices exceeded that, nearly reaching 43,000. But if the week closes above 42,000, I think that's going to be really great for the stock market, especially the US 30. I think that should bring a lot of sentiment back into the market there. Good morning, Chucks. If we take a look on pound, it seems like they're struggling to make a low low. Is it a strong support? I think generally for pound, I'm not really too concerned for pound. It does kind of overshoot below our expected range, right? In terms of the expected range at 1.32, it kind of overshoots a little bit. So prices actually broken below 1.31, but we don't have a close below 1.31. Support 3 is coming in at 1.308. I think this is a good support. It's 78.6%. It's going to be where the support 3 on the weekly time frame is, and it's very near to the Ichimoku cloud. Ideally, I do want to see price touches the Ichimoku cloud first before bouncing up. If the pound USD is able to do that next week, then we might, position ourselves, for a longer term trade. We might also consider that the pound USD might have completed its retracement. I don't like how it's actually retraced down to 78.6. It kind of overshoots a little bit. So that's the reason why I say it was that 1.32 is kind of the limit where I'm actually more comfortable with calling a strong sterling. But this correction here below 1.31, is it good? I think it's still okay for sterling, but if you take a look at the fundamentals here, the labor data is actually pretty good, right? We got NFP numbers above 200,000. Market was just expecting 140, 130,000. We got a lot more than what the market is expecting. 110, 114,000 more than what the market is expecting. Remember, market is expecting 140,000. We got 254. Last month was revised up to 159. I think that's actually pretty good. Unemployment rate has also gone down. Instead of staying at 4.32% or go up to 4.3, it has gone down to 4.1%. So I think overall, in terms of the fundamentals, it's really hard to say no, the US dollar can't go up. The other concern that I have here, we might see a little bit of an exhaustion, end of the week's kind of scenario here, but that's pretty much it. Not much on that. Does this mean the Fed first cut already making changes on UR? What is UR? Euro? How about Bank of England word for more aggressive rate cut? I don't trust Bailey. I don't trust Bailey. At this point in terms of whether or not it's aggressive for Sterling to cut, but yeah, I think that has put a little bit of a pressure on Sterling, and that's the reason why it kind of overshoots below 1.32. I wouldn't trust Bailey at this point in time. Lagarde, I'm okay with trusting Lagarde and what she's saying. I think everyone in the ECB has already been saying the same thing that, they are really looking at inflation coming in at target range. They're looking at cutting back on interest rates just to boost the economy up a little bit. But for sterling, we don't know as of yet. Does this mean the Fed first cut is already making changes on the unemployment rate? No. No, no, no. Remember, all those rate changes does not have an impact onto the market, at least until, at very least, it's going to be at 3 months mark, right? So whatever the changes is, we're not going to be looking at that until about January, February. That would be the earliest we can say, oh yeah, Fed is cutting rates, improving the labor market there. But the first rate cut in terms of the labor data, remember this, the labor data we have here was basically September's number. So it wouldn't make sense that the rate cut that happened in September has an immediate impact into the market. No, we're probably not going to be looking at that on that note there. Okay. Okay. So yeah, Aussie USD. We're finding this being resisted a little bit at 68 cents. This is kind of struggling a little bit to push down below 68 cents. We only have about 50 minutes left before the first half hour is ended. So yeah, depending on your entry price, you might want to move your stop loss to break even if you want to. But if you do want to leave a little bit more room for the Aussie USD, then you want to have your stop loss about at least 68.50 just in case we do see a little bit of a fade. I'm just not looking at the fade here happening right now until we have a confirmation that we bounces off 68 cents. Euro USD, this one here is grinding further to the downside. I think this is safe to say this is likely going to test 1.0950 as a support level on the Euro USD. So we'll see. We'll keep the 1.0950 here in terms of our take profit levels for the Euro USD. Pound USD testing support here. Not really looking at a lot of potential bounces as of yet. Aussie New Zealand USD. We can't trade the New Zealand USD because it was already trending to the downside. The dollar Japanese yen, we're not going to be chasing this trade either. We want to see whether or not this week is actually going to close above 148. If it does close above 148, then next week we anticipate that push on Monday towards 149. That's where it's going to find that resistance there for the dollar Japanese yen. All right. Okay. For gold, intraday wise, it is, you might call it a box, right? But if we take a look at it from a daily time frame, obviously it's really more of a pennant at this point in time. But yeah, if you do want to trade out of this box, if you want to, I do want to focus because if I were to zoom out, you can see how things starts to shift up a little bit. So y'all would be mindful of this one here as our support trend line, and I do really want to focus a little bit more here in terms of our resistance there. And this is technically why I say this is still within a symmetrical triangle because if we take a look at it on a 4 hourly time frame, it never exceeds outside of this triangle. So I wouldn't call it a box because the proper picture to look at gold right now is more of a symmetrical triangle, and because it has that pole patterns before the triangle, it is technically a pennant. Okay. Please say buy levels for gold from where it will bounce. Um, well, if you look at it, you have to be mindful because this is a symmetrical triangle. Obviously, the buy levels from where it's actually going to bounce depends on two things. If you were to completely zoom in, then yeah, you might look at this box here and say, oh, okay, let's pick it out at 2635. Just be mindful with what we have here. Not that keen on buying and positioning for gold here. Okay, just to be clear, because we are kind of at a historical high, and if we mention, if we take a look at the outlook that we have talked about for 2 weeks, ever since gold hit historical high, it is at a very high risk of a potential profit taking, and the profit taking could actually take it down a lot more. So just be mindful of that. If you do want to buy, then you might want to buy now, right? You can buy now if you want to, but make sure your stop loss is going to be at that low that we have as of just now. All right, are you gonna look at that and say, all right, that's gonna be my stop loss? That's going to be a little bit too risky. I'll just be honest with you. All right, if you want to buy, make sure your stop loss it's going to be below. It has to be below 2635. If you're okay with that stop loss, then yeah, go for it. In terms of target level, you don't really target exceeding, whatever the triangle that we have here. We're probably going to be limited at about 2,650, 206,060. That would be the max, right? With it, it really depends. I'm not taking the straight, but it's up to you. Okay. Plus, the company already anticipated the rate cut and start taking employments before the rate cut. I don't think it works that way. I think layoffs are still happening. Uh, with the hire that we're looking at, I don't think it's whether or not the company needs it. I think there's a lot of jobs that can actually be replaced, and also the quality of the younger generations in terms of employing them is actually not that great. So we're looking at a labor market that's, yeah, it's probably going to be recovering, but I mean, like, would it gain substantially within a short period of time just because of one rate cut? Probably not, right? Probably not. Yeah, probably hirings are probably going to start again, after the first quarter of 2025. I think a lot more hires are likely going to happen in the second quarter. But until that happens, I wouldn't bet on it that a company is saying, hey, we're going to be hiring more because of that rate cut there. But the rate cut does help the company in terms of their profit margins, and that's the reason why we are likely going to be seeing a little bit of a rally for the market there. Okay, well, that's pretty much it. I don't think there's actually much in terms of what we can do here. Euro USD and pound USD, we didn't get on pound USD. The reason is if we had created that buy stop for the pound USD, it would just trigger a buy stop there, but it might actually not break below it. So this is the reason why, in terms of the market condition, we're just not looking at a condition where we can actually straddle the market because it's technically in a channel to the upside. You might break to the downside, but in terms of entry levels for this one here, we just can't straddle that. Same thing with the dollar Japanese yen. Dollar Japanese yen can straddle on the upside there if we place that at 147.25. It's just a huge risk though. Um, Aussie USD, this one here is a stable currency. We do require this one to break below 67.75. If it doesn't push below 67.75, I would say just clear off the Aussie USD. You might actually get stuck in that position there. So, if you want to get out, right now is about time to get out on the market here. We're not looking at a fade here. We're looking at the kind of the maximum there for the Euro USD and Aussie USD. So if you do want to get out, feel free to close out any position. Just be done for the week. Enjoy your weekend there, and we'll come back here next week for the CPI. But yeah, I think market is probably going to process this. Again, just a reminder, it is going to be Friday. Uh, Liquidity is going to dry up in about 2 hours time unless you're trading the equity market there in the US. Okay, all right. So we talked about that. Obviously, we already talked about the trading strategy here. Again, three main strategies traders use to trade the news. We have a strategy based on the two pending order settings, which is the straddle, or you can also use the limit orders if you want to. We'll talk more about limit orders on Tuesday. You can also trade before the data is released, and you can trade after the data is released. But for more effective trading, you should be able to combine all the strategies here. You know, uh, but trading after the data is released, you might actually want to wait a little bit. You don't want to be buying at the very top here right now, especially on the currencies like the dollar yen or Swiss or Canadian. You don't really want to be shorting the Euro USD or the Pound USD at this point in time either. It's just way too far from the current range. Ideally, you might want to trade with a limit order if it does come back to the range there. If you didn't pick up any trades, if it comes to trade level there, then yeah, before the news breakout, you can place the limit order around those area there, going with the initial direction there. But I'm just not looking at the potential for a fade tonight. You might actually get a little bit of a fade, but maybe in about an hour or two when the equity market opens. But right now, we just don't see an immediate fade. Typically, with the fade, we saw that happen within the first 5-15 minutes. We have already exceeded 5-15 minutes now. Okay. All right, this is the code again for tonight. It's Nonfarm 2024. So make sure you use the code when depositing into your Octa trading account. This is valid until the 31st of December 2024. All right. So, any questions so far for tonight? No? All good? It's not really. It's a huge move in the market, but in terms of whether or not it's actually hard to navigate, I don't think it's actually really hard to navigate. The numbers is just way too high. 254,000 for the NFP. That was a huge surprise. I don't think anyone in the market kind of anticipated 254,000 gain. We got a couple of hints from the ADP number, but we don't look at the ADP number as kind of a reference point for the NFP. ADP payrolls are private payrolls. They are typically very different to the the NFP numbers that was released by the BLS. But yeah, unemployment rate coming down to 4.1%. I think that's a good number there as well. Okay. All right. That was a good session for tonight. What's next? News trading theory and practice. That's going to be on Tuesday. That's going to be on the 8th of next week. We're going to be talking about advantages and disadvantages of news trading. And we're going to be looking at the most profitable news for trading as well. Obviously, we're going to be looking at the price actions on the criteria in terms of how we look at when to use the buy stop, when to use the sell stop, when to use the buy limit, sell limit, right? Typically, we do want to know what phase the market is in. If we don't have the corridor volatility, if we don't have that, you know, um, accumulation phase in market, then we're not able to straddle the market. Simple as that, right? That would be critical rule. But if you want to know more, never attended a theory session, please do attend our theory sessions. I don't see a lot of traders coming into the theory session. So ideally, do come in if you have never traded news before. This would actually help you a lot when navigating news releases, right? When to use the buy stop, sell stop strategy, when to use the buy limit and sell limit strategy. Okay. All right, guys. Have a fantastic weekend. Have a fantastic day ahead. And look forward to see you guys next week. We have two sessions. That's going to be on Tuesday for the theory and practice, and on Thursday for our live CPI trade. Have a fantastic weekend, guys. Stay safe, and